The last stop loss strategy we're going to talk about is based on a time limit. Time stops is what they're called, is when you close out of a trade based on a predetermined amount of time. So your trade could be open for the set time of a few hours, days, weeks, or you could have it so that it only stays open during specific trading sessions, or only during the market's open or active hours, or whatever you want to do. For instance, day traders have a set time they trade. They enter trades at the beginning of the day and exit before the end of the day. This would be an example of a time stop because they stop or close out of their trades every day at a certain time. Or let's say you're a swing trader and you decide you're going to cut off all of your trades by Thursday at 6 p.m. in order to avoid any unpredictable volatility on Friday or any gaps in the market when the market opens up on Sunday after the weekend. This can be very beneficial because you can free up some margin by getting out of trades in order to get into better trades to make more money.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.